Welcome to Member in Focus. I'm Emily Evans, Senior Media Advisor at Spoke, and I'm joined today with Kevin Johnson, Executive Director at Argonaut. Kevin, thanks for your time. Let's just jump straight into it. There's been a lot of different price changes for a lot of different commodities so far this year. What's been your take?
Oh, it's been the most extraordinary time. I've been involved in this business for 35 to 40 years now. I'm not going to give that away, but I can tell you it's very active and I've never seen anything more interesting. Number one, I've never seen more money in the world than there is at the moment. Of course, came from COVID, and just when COVID started to finish, the governments wanted to rein that money in. Inflation took off. They had to raise interest rates. They haven't been able to rein the money in, and that money is still racing around the world trying to find interesting homes. And fortunately, they've found it a lot of the time in commodities.
Can you talk me through, let's start with gold. Gold has had some incredible price hikes over the past couple of months.
Yep.
I guess, what's causing this, and do you expect the prices to stay relatively high?
Well, I hope they do stay high because it's good to see, and it's good for Western Australia or Australia full stop, because we're a large gold producer. But I think it's driven by a number of different things because governments are running massive debts now. They've raised interest rates, so as a result of that, they've got to pay more interest, so they're printing money. Gold's real, you can't print gold, it's real commodity, so that's important. Everywhere I look, I can see nothing but positive signs for gold. We've heard it for many years, but I think this time it might be different.
We've also all seen the price plummeting when it comes to nickel and lithium in particular. I guess, is there going to be a catalyst that we might see that might help with some price recovery?
I think definitely so. Certainly in the lithium front, we had a big spike, it was most extraordinary. And this has been the biggest commodity price I've ever seen. It went from $300 to $6,000 US in about a year. All the producers made a lot of money and they generated a lot of cash. But of course, it was too much too soon, and then the EVs are still catching up, but they will do that in time. So then the production came along. They've got what they want now, but it's certainly not the end of the road for lithium, that's for sure.
And one other that's come out of the woodwork has been uranium. We've seen that price just go crazy. I guess, do you expect that seeing this amount of attention on uranium globally, that it might change the attitudes here in Australia?
I think in time it could do, and I think it sort of has to, and I think that whole momentum is growing for uranium. It's more about nuclear energy because it's emission free, and that's important to the globe. Uranium, although there's a lot of it around, it's not really produced, and there's been a couple of uranium funds that have taken all the supply out of the marketplace, which makes it really interesting for those around. But unfortunately now it's at a price now where almost everyone who produces it would make money. And of course there's not that much demand around for it. So that'll sort itself out, probably a little bit like the lithium market did.
Now, Kevin, you're very much into looking at the bigger picture and the geopolitical atmosphere around the world and how it impacts markets. What's been some of the things you've been noticing around the world so far?
I think the really big issue was, as I said before, the amount of money that's around. And as a result of that, that money has been finding homes in passive hands. People have been putting money into ETFs. Governments have been setting up sovereign wealth funds. So there's a lot of money around, and they tend to be very herd orientated. So they tend to go where the action is. When there's a lot of money moving around, they need to be where they can get liquidity, where they can buy and sell things. So they tend to go for the bigger things. And what tends to happen, things get overpriced. So then the money, they will try to get out again. And so we're getting this massive volatility, and you'll see it from time to time, whether it be in Bitcoin or the big stocks, tech stocks in the US, as we saw in lithium. Not really seeing it in gold yet. No one really believes the gold price. We saw it in some of the uranium stocks. There's lots of things moving around that makes it very exciting times.
2024 was meant to be a shocker of a year for IPOs, but a slightly more positive year for merger and acquisitions. I guess, moving forward through 2024, what's your outlook on how capital markets will operate?
As the quarterlies come out, we're starting to see the tail end of the March quarterlies now showing good cash flow. As it comes into the next quarter, that'll come again, and then I think people will get really excited. But what's happening is the big companies are starting the M&A activity, as they always do. The big companies always lead the way in M&A. They're looking at the smaller companies. They don't really want to get taken over because they know they've got an asset base that's probably worth more than what they're trading at right now. And so they're a bit caught in a place because no one's really buying their shares because they don't believe the gold price. And as a result of that, they don't want to raise money at these prices. So they're stuck there. So we're at this point of flux right now. I'm waiting for investors to say, really, some of these shares are just too cheap.
And for 2024, what's Argonaut's plans? What have you got in the mix?
We're a resources house, right, and we specialise in that. I look at the demand for resources. Decarbonisation is not going away. That is still big. We still weird weather events all the time, as we see. It's a big issue that's not going away. Governments are spending a lot of money on it. But you're also underestimating defence spending is growing too. Almost every GDP country wants to do 2% of their expenditure in defence. They're going to need raw materials for that. What's happening in the raw material space? Well, there's not a lot of new mines. There's some geopolitical issues that are growing. Government red tape's been growing. It's hard to get approvals for things these days. So supply's not coming, demand could come. So things like we saw in lithium and currently in gold could happen again. So Argonaut as a firm, we've recently upgraded our research capability. We've opened a Sydney office, so we're certainly open for business and looking to partake in that.
Kevin, thank you for your time. This is Member in Focus, brought to you by AMEC in partnership with Spoke.